Morning everybody, it's Chris here from Serene Education with the 4 majors notes update for the 6th of September 2012. Hi guys, just going to be going with 4 majors just briefly. This today and tomorrow, lots of news. Just want to tell you that straight off the bat, hell of a lot of news out there today. We're going into the first Friday of a new month, being September. So we have the all-important non-farm payroll figures. But before we get to Friday, we have also the interest rates announcements for both the European section as well as the STIR GDP, good old Great Britain. So lots of news. Not only that, there's a whole lot of other ones. Those are the most important ones I could just talk about straight off the bat. They are really, really important. We have ECB press conference as well this afternoon at 1:30 GMT. We also have the unemployment claims also at the same time for the US market at 1:30 GMT. Crude oil inventories, also quite an important one for you guys. Please do some analysis on your crude oil. How much oil is in storage. It's important because of our productivity figures, etc. like that. You'll be surprised how much oil is used in production these days. It'll give us a real good outlook into how much the market has contracted in terms of how much production's really been going on. And then 5:30 p.m. GMT this afternoon, we have President Draghi speaking for the ECB. So lots of news, guys. Look at what we're doing today. Just looking at the major support and resistance levels, having a guideline of where they are trading in comparison to these major areas of consolidation. Because if prices are trading at these major consolidation areas and we have a lot of news coming out, then it's good to potentially, well, it's good to know. Because if the news comes out favorably or unfavorably at a major support and resistance level, we could see a change in market sentiment for one. So if we have a lot of upside movements and we're trading at a resistance level and there's a lot of news around that particular pair that could influence price pulling back, then we want to be known about it because it could give us an opportunity. So here we go, in front of me, euro against US dollar. I'm just looking at the dailies today, guys, keeping it nice and sweet and to the point because we are looking at a lot of data. I just want to make you aware of any major support and resistance levels on these time frames. So you can see quite clearly here on the daily, we have one that really sticks out. It's roughly around, there's a major consolidation. Not going to be really picky, roughly around the 12,700. There's a noticeable one here that really sticks out for this particular pair. The overall trend on this on euro against US dollar is very, very negative. You can see straight away off the bat, the trend is negative. Hence the reason why the institution moving average is above priced. Since September of last year, price has been trading below this institution moving average, and you can see that the histogram on the other side has been very much red. One or two spots of blue, however, these blue areas coming at major resistance levels, so there was no opportunities to buy when these when the actual template went blue on this particular occasion, because you'll be trading into resistance levels. So where are we now? Trading at the hard right edge in comparison to a major support and resistance level as well as a trend line. Well, you can see quite clearly here as we look at the hard right edge that 12,700 is almost upon us. The trend line is almost upon us, and you can see the consolidation on the candles that are telling you that there's sentiment, or we are trading into a major support and resistance level. A lot of wicks the past couple of days, heading into today, Thursday. We saw Wednesday, a bit of upside, a lot of moving yesterday, small trading range, however, still at the 50% of the actual candle, which is great, good sentiment. In doing so, you can see there's a little support area here, just roughly around the 1250-500 mark for this pair. If I just draw a horizontal line, something nice and straight, and I just move it to the price support in this area, you can see quite clearly we had a lot of consolidation at this particular spot. And you can see the 23rd of the 8th, last month, the 24th. So we had 1, 2, 3, 4, 5, 6 days of resistance, followed by the breakout. And now we've had 1, 2, 3, 4 days of support above this 1250-500. So great. So as long as it maintains above 1255, then intraday we should be looking at as our support. As long as it maintains above 1255 intraday, then we could likely see price continue to reattempt these highs above us, this major support and resistance level. However, you can see quite clearly we have also seen a number of candles here with exhaustion, i.e. very little, a lot of wick on the upside of it at a resistance. Okay, remember, resistance, if you see price rallying into a major resistance level and pulling back, this confirms an exhaustion candle. We have 2 so far. Just want to go back here to June this year. You can see a lot of exhaustion candles as we head into a major resistance level, and sure enough, price gave away. the move. So as we head into a major resistance, we have to be aware of that. Two things. I'm not trading as it stands at the moment, primarily because of all this this consolidation we're likely to see at a major support and resistance level. I want two things to either happen. Okay, the bullish trend at the moment, our CTC is telling us we should be seeing upside movement, and our intermediate trend, i.e. our smaller time frame, is showing that, exactly that. Swing highs, intermediates up. However, the daily trend or the major trend is still negative. Okay, you can see that. We see a lot more the histogram being very much red in this case. Yes, we do have everything going blue just recently, and we could have actually profited from that to the upside with these little breakouts here that we saw on our smaller time frames. Notice the one here at 1235, a lot of hesitation at this area. Nice breakout. We could have actually looked at this 1265, 1270 as our long-term target, and sure enough, we've actually hit into it. We have seen a lot of consolidation though, so patience and knowing when to take the profit was important. I know some of our students have done really well from this pair to the upside. However, it's now time to consolidate, move your stops up, be vigilant, because we are going into a major support and resistance level. We want two things to occur. We either want, if this is still to remain positive, a nice bullish engulfing candle. If this candle over here has a nice hammer on a support, i.e. 3-day support, then you want to see a bullish engulfing candle to precede that, to tell us, yes, this is genuine hammer, and we should be seeing positive sentiment. Like over here, for example, hammer movement. Same over here, hammer move. It's got to move, but it's got to move above this major support and resistance level. It's got to break through that with a lot of momentum to tell us, yes, we are still in favor upside. And if that's the case, that's going to be my confirmation signal, and I'll look at potentially the highs around here at 1285 towards the institution moving average as my first target. The other scenario would be bearish engulfing over here, as we've seen before. Bearish engulf. Oh, this over here is an evening. This is a bearish Arami. Bearish engulfing here, an evening star, bearish engulfing at a major support and resistance level. Because if that occurs, we have a bearish engulfing candle that engulfs this entire consolidative range. That will be clearly telling us there's exhaustion now. This is clearly a resistance level, and we should be targeting prices to the downside, or particular targets to the downside. The first major one will be back down here towards our 12,3500. Why? Because we've seen consolidation here in the past. So if you're not trading, looking for a trade, we want two things to happen. We want a bullish engulfing candle to make us, to push higher, to tell us that sterling is still looking good against the US dollar. That will also be reflected in the fundamental news announcement that comes out over the next couple of days. So if you're looking for a trade, I would rather you stay on the side than get bitten. Okay, we want confirmation, up or down. Get those, one of each of those signals, and then we look at our trade entries, stop management, etc. like that. Sterling is the next one. Okay, guys. So what's been Sterling? What's Sterling doing? Okay, over the major trend, you can quite clearly see the price. The swings have been lower after we attempted this major high back in 1675 here in April of last year. Major support and resistance level below us here at 15,300. Why 15,300? You can quite clearly see over a number of years, or a number of years. I don't know how far I can go back. A year and a bit, you can see quite clearly that there has been a genuine support area around that 15,300 mark. So that's good, because if price is bouncing on here, you can see how high the actual bounces went to. Here, exactly here, when it broke above the institution, moving it, well, capped by the institution, breakout, then it rallied. And it rallied towards this this major trend line, which is negative, it's just falling, swing lows, depicts downside, and the oval. So it's being squeezed between a major point and a support and resistance level. It's consolidating sideways, and you can see quite clearly a bounce here, and price has been making its hit resistance, which came in the shape of the 15,700 mark, which actually coincided quite nicely with our institution moving average for a number of months. So I just want to make sure I get this right so you guys can see it. There we go. So wanted to see a break above it. Bang! There was a confirmation. Everything was in our favor, moving average into that. The pullback, which happens 98% of the time, and any breakout, the confirmation, this is now support, and sure enough, price rallied higher. Back upward to this price support and resistance level, that would have been your first target, and now it's moving higher. So where's it likely to go to? Well, ultimately, if price continues this way, we could see price heading back up towards this major trend line. And we've seen here price coming unstuck so many times around this area, so we could target 1610 long term for this to be our particular target. Otherwise, what we could do is take the high we saw in May, there we go, to the low we saw in June, and just fib projection. You can see quite clearly here price coming unstuck at 61.8. and the 61.8 is in the same area as the 5900 mark, which is an area of consolidation for this pair. So got to get above that 5900 or 61.8 to be genuinely looking for potential any further upside movement on this pair. So I've got to make a note of that. It's important that you make a note of these areas, because that will give you a guideline where price likely to go to. So you can see quite clearly now, price, as with this euro-US dollar pair, you can see our trading into a major resistance level. CTC is blue across the board, fantastic, and you can see the trend just recently on this pair has been very, very steep, at least a good old 45-degree angle. Moving average all below price, CTC, a strategy template is in favor. The only downside, guys, is this major support and resistance level here at the 61.8, which coincides with the 5900. Nice psychological round number. Yesterday's candle, very wicky. You can see that buyers and sellers were undecided because it actually closed off with a wick, an equal wick on either side at the underside of this. We don't trade indecision. That's an indecision candle. We want to see a decisive candle. If sterling still finds that it needs to go long, then we need to see a bullish engulfing candle here to confirm that, and then we should be targeting 1610 for the foreseeable future. The other scenario would be a bearish engulfing candle at the underside of this. If we do get a bearish engulfing candle, engulfing the last 4 days or 3 days of analysis, then we should be targeting 15800 back towards 1575, this consolidation area at the bottom here. That's because it's now clearly resistance, and we should be looking at that as our first target. So here again, we want to see either or. We either want to see a nice bullish engulfing candle or bearish engulfing candle. US dollar Swiss franc. What's this pair been doing these past couple of days? Let's have a look at the overall trend on this particular pair. Price heading into the 1000 over the past couple of months. This being the major long-term support and resistance level on our weekly charts. Sorry guys, just want to make sure I put all these support and resistance levels for you guys. It's important. Okay, so heading into that area after the breakout down here in May, a lot of upside movement, then the pullback. If you're looking at projection figures, so there we go, to the upside, the pullback, and then the projection higher. So swing high, breakout over here of the price support and resistance level, price pulling back and then moving higher, and then heading into the 61.8, eventually into the 78.6 area here, which coincided really nicely with our 1000, and sure enough we had a bearish engulfing candle as we headed into that resistance, and price is now falling back. Nice little head and shoulders, one could potentially say. And then heading back towards a 970, consolidating a 970 for a number of weeks, and then a breakout over it. A nice bearish engulfing candle telling us, listen, our sentiment was still looking negative. The intermediate trend for this pair started to look quite rosy because we had an exhaustion candle at a resistance level here at 980. Resistance, 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 resistance. Failing to break any higher after this consolidation here at 970. So if this was a support, we want to see price moving higher. No, that wasn't the case because we had a lot of wicks at a prior resistance level, and then we had a bearish engulfing taking away all of this sideways motion, and then we had the bearish engulfing bang. That was a trigger signal. Price has now been spending more time below 960. A lot of ceiling here, a lot of resistance. Yesterday's candle, very indecisive. Doji, very, 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 very indecisive candle at the underside of 960. So one or two things. You can see the CTC strategy is starting to look good now. Our 20 and 50 period moving average are above price, acting as a ceiling level. Our intermediate trend is negative. You can quite clearly see that. Trend line is above price, also acting as ceiling. The only place to go now, if we see this is a genuine ceiling level above us also in terms of the fib projection level here at 960, is for price to go down. Okay, so we need a confirmation bearish engulfing candle to tell us this is now a genuine ceiling, and we should see price heading, if that's the case, back towards these areas here at 940 or 945 to complement with the institution moving average, which is still below price. So it's acting support. So then we know the long-term trend is still positive. However, the intermediate is looking negative because we've come unstuck at 1000. There's one or two things that needs to happen. A bearish engulfing candle to confirm, yes, sentiment is still genuine negative, because that's what we should be looking for. We shouldn't be looking for any buying sentiment, because if buying sentiment, we need a positive candle to break higher than 960. A nice bullish engulfing candle. That's the only outlook that price will look for upside favoritism, is a nice bullish engulfing candle to break higher than this consolidative range that we've seen for the past past week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Last 10 days. So bearish engulfing would clearly tell us, look here, 940 is still positive, looking downside. Bullish engulfing, break above 960 would tell us, yeah, we should be looking for potential upside back up towards this prior major support and resistance level here at 970 that we've seen, which coincides with the 38.2 fib projection level. That's it, guys. You can see I've made it quite clear to myself what it needs to do. Okay, so yeah, patience is a virtue. Got to hang tight. There's a lot of news coming out the next couple of days, which will definitely reflect in the US dollar, Swiss franc. So got to make a note of it. And if either or, happy days. So put your alerts on and sit tight and wait for those confirmation signals. Last pair of the day is US dollar, Japanese yen. Here, what's this been doing? Well, just pretty much consolidating at 78. Why 78? 78 being a major support and resistance level in the past. Okay, we can see prior to that breakout that we saw here in early February this year, it consolidated here through August, September, October, November, December. A lot of consolidation at the 78. Yes, 1 or 2 wicks over here, major candles here. This was intervention from the Japanese government trying to get to bolster the US dollar, selling its own currency and buying billions in the US dollar to try and get a rally. A lot of negativity on this particular pair over a number of months has seen the US dollar trading at an all-time low against the yen, which is not good for both countries. So intervention was attempted. That failed to stack up because there was nothing really behind that other than to be buying into the US dollar, because US dollar was just looking very negative. Here, breakout. This was on fantastic figures on non-farm payroll. A lot of movement after that. Break above it, and we saw price rallying into a major support and resistance level here. Also on a weekly and monthly, which happened to coincide with the 8400 nice psychological round number. As we head into that, bearish engulfing candles, a lot of indecision candles, bottom was exhaustion candle here, and sure enough we had the bearish engulfing to tell us this was definitely now a ceiling level. We should be looking lower, and in doing so we were looking at another price support and resistance level, which happened to be our 80. So you can see I need to plot all these major support and resistance levels on here, because then I can work out where price is likely to go to, or how much I'm likely to profit if, depending on where price is trading relative to these major support and resistance levels. So 80. Now, as you can quite clearly see, the CTC has definitely gone more red. There's more red above here than blue, and then once you have once or twice there's been blue, we are trading into a resistance. So there's no genuine buying sentiment. Yes, here a nice breakout, sentiment was still red on either side. Why? Because the actual candle, this candle, or any candle preceding these support candles over here above a major support and resistance level, did not move away, i.e. move in the direction of the breakout, pullback, continuation. That bearish engulfing tells us the sentiment was generally not behind price, and you can see the CTC on the other side staying negative, hence the reason we went back into the consolidation range. So 78 now is a major support. You can spend 10 days or more sitting at support charts, build onto that. However, that sentiment's still not looking positive, because the major went into this 80, it failed before we even got there, and now you can see swinging lower. So it's made smaller swings. So it is generally looking swing low, swing low, swing low. So we're actually being squeezed now. We're trading below the institution moving average. We're trading below all the moving averages on our daily. And the trading ranges on this particular pair are looking very, very weak. So as you can quite clearly see, a lot of support and resistance here, 78.50. Just recently, a lot of consolidation. 1, 2, 3, 4, 5, 6, 7. 7 days of consolidation, then we had the breakout. Now we've had 2 consecutive days of resistance. You can see quite clearly there's a consolidation area here. If it remains below 78.50, we need to see price with a little bearish engulfing here to tell us that 7800 is back on as our first target for this particular pair. CTC is negative across the board, so all we want now is a nice confirmation signal. We don't trade indecision. You can see quite clearly we have an indecision candle yesterday. We want to see a decisive candle. 1, 2, 3 moving averages above price. If it is, this is genuinely a price support and resistance level, i.e. this is support, now the breakout, pullback, and the continuation, the downside, we want to see a bearish engulfing candle to confirm that, and we should be targeting 78. End of story. The only other thing that's going to stop it from price going any lower is to see a bullish engulfing candle, which would then tell us we should be looking favor to the upside, and we should be targeting potentially this institution moving average long term. Okay guys, that's it. Kept it nice and simple. Built my analysis around my support and resistance levels, looked at my confirmation CTC template to give me further confirmation. That's it. Kept it simple. Now we got to just be patient, because there's a lot of indecisive candles out there that precedes the news that we're having today and tomorrow. Non-farm payroll tomorrow, but we have interest rates announcements, etc., etc., etc. today. Be aware of it. Make a note of it, because they will reflect in price action today, guaranteed, or the next couple of days. Okay, that's it from me. Keep it simple, guys, and follow the rules. Back it up with sound money management, and you will not go wrong. Okay, positive thinking. I'll see you tomorrow morning. Until then, trade serenely.